What's up, guys? This is Brian getting back to you live from Trade Algo. It is September 23rd, Tuesday, going into tomorrow, which is Wednesday, the middle of the week, hump day. We had some decent trades today on Walmart and SPY in the middle of the day. Um, I think SPY, we clipped a nice 38%, if I'm not mistaken, and yeah, 37% gain around 1:49 p.m. a couple hours before the market closed. It's not like me to trade in the middle of the day, but hey, if there's a trade, there's a trade. And Walmart a little bit earlier in the day, I think I got out for somewhere around like 15 or 20%. Just it was a slow, choppy day, so we take what we could get, folks. But the way these kind of review videos work, I'm going to start doing a little bit more of these to be a little bit more active. But we've been in a really, really choppy mess. As you guys can see on the daily time frame for SPY, the S&P 500 ETF, we are in a clear uptrend, right? One of the first things that I look at is, what is the trend? Is it forming higher highs and higher lows, or is it forming lower lows and lower highs? And right off the bat, just eyeballing it, higher high, higher low, higher high, higher low, a little bit of consolidation there. Higher high, higher high, higher low, higher high, higher low. As long as we do not breach this area, I'll get you a little bit more of an exact figure on SPY. That is roughly, again, it's a candle close below 659.13 for those of you that like to take notes and then plot that on your own charts. 659.13. As long as we are above that, and we can even wick below that, right? Again, pay attention deliberately to how I said it. A candle close below 6953, 65913. So we can even come down here and then close above it and then move on higher, right? The market has been doing these nasty liquidity grabs before supports are respected. So that's also not out of the question. A lot of people will panic and say it's below 65913. Yeah, but you have to wait for the daily candle close to see if it's still in a daily uptrend. Now, let's just say it does breach 65913 and by a couple pennies. Then we're now in a downtrend because we formed a lower low. But then the newbies and beginners will think, oh, so I'm just going to grab puts, right? That's not how downtrends work. Remember, uptrends are higher highs and higher lows. Downtrends are lower lows. So if a lower low forms, we need a lower high, right? And in a downtrend, let's open up the Technical Analysis Bible, which I do, in fact, read every day. People think I joke or embellish or say it facetiously. I read this every single day. You want to prime your brain on what to look for, right? Rule 5. Once we're in a downtrend, resistance is stronger than support. So if and when, I'm just speaking very hypothetically, let's just say we close down here, I'd probably be looking at a 10 simple moving average for a moonshot downwards, right? How much we're going to go down? Again, I don't get into the business of trying to predict the market. That's how you lose your money in record speeds. We're not here to predict the market. Every time people try to predict the market, they usually lose their butt. We're here to react to the market. How do you react to the market, Brian? You buy calls at support and puts at resistance with confluence. That's it. It's a simple formula. So SPY still in an uptrend. I don't think we're going to get in a downtrend. I'm just speaking very hypothetically. I actually think this is going to happen again. Many of you guys know that I'm not a momentum trader, but if I did use any one of my indicators as a momentum tool, it's always the 10 simple moving average, this green line you see right here, right? And when we don't touch the 10 for a while, it's usually a nice springboard. You can see here that we closed above, came and tested it, bounced off nicely to the T, and it's been 1, 2, 3, 4, pretty much a week since we tested it. So if we touch that tomorrow and we do a nice liquidity grab below, we're still likely to go higher. All right. So I'm bullish on SPY until otherwise, until some fundamental news throws off technicals. Because again, technicals only work best in a neutral market, folks, when there's no news and therefore a heightened emotion driving the price action. I don't see anyone on YouTube or anyone on Twitter or X teach about this for whatever reason, but technicals work best in a neutral market. Fear, panic, From bad news, like today with the Amazon play that we had, bad news hit that they were closing their Amazon Fresh stores in the United Kingdom. That bad news threw Amazon in a fear, panic selling frenzy. And it doesn't even matter if the emotion is positive. Remember when Donald Trump got elected president and the market just pumped nonsensically? All your resistances just didn't even matter. They just cut through them like a hot knife through butter. So negative emotions or positive emotions, it doesn't matter. Emotion waters down technicals. So for those of you that are chasing pumps or dumps, be careful because those pumps or dumps could be emotional and you're trying to use technicals on something that, again, technicals get watered down with any form of emotion. So I am speaking strictly from a logical point of view, assuming no news ruins our play. I would love a bounce off the 10 simple moving average. I imagine that QQQ looks very much the same. So let's look at Qs. Yeah, the 10 simple moving average is a little bit farther away, but I still like it. It's pretty much the exact same thing. We're still in an uptrend. Let's get out the paint tool of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. The higher low is way down here around the 590-ish level. So it would be nice if we grab that 10, grab that higher low, even grab that 4-hour support at 588.34, grab all of them, and then zoom back up. That would be awesome before the crash, right? Um, but short to midterm, I am bullish, folks. But I'm waiting for calls at support. Remember, calls at support puts at resistance. Calls at support puts at resistance. Calls at support with confluence and puts at resistance with confluence. Let's take a look at IWM, which formed all-time highs. So the Russell small caps are having a field day lately, but it is reaching some form of consolidation. I personally don't trade all-time highs all that often, but it's the exact same setup as SPY and as QQQ. Bullish continuation using the 10 simple moving average. Why do you use the 10, Brian? Because a lot of people like the 7 and like the 9 and the 11 and the 13. The 10 is a healthy average of all of those common and widely used simple moving averages or EMAs, right? I like SMAs because that's what Wall Street uses, in my esteemed opinion. You guys can agree or disagree. But the 10, that's why we get liquidity grabs. Grab the 9, grab the 10, grab the 13, and then respect the 10 as a whole. But you can see here that bullish continuation, right? Bullish continuation. Bounce off the 10, 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 bounce off the 10. I'm not trying to be annoying. I'm just observing. Bounce off the 10. And it's been 1, 2, 3, 4. Tomorrow will be the 5th day that we could bounce off the 10. It's been a while. And many of you guys know why are you saying 5 days? Why is that relevant? Well, Rule 12 of the Technical Analysis Bible, which I will put in the description of all of these YouTube videos, it's free for everybody. The first touch of a major support, anything on the daily is major, guys. We only get one of those candles a day. Or first touch in a while or long time relative to the time frame is typically the strongest bounce, even if we do liquidity grab below it. Remember, when you're using big time frames, you have to make a wider stop because and more room or time to give your tape because of the deep liquidity grabs below support or the deep liquidity grabs above resistance before that support or resistance is finally respected, right? So all of these rules go hand in hand. They're meant to be used together. So IWM looks good. Bitcoin even looks good, right? It got spooked a little bit. But we lost the support. Got to take out from my charts. Disgusting. It's consolidating in between 111,515 and 112,500. So I think we're going to bounce around there for until we get some news. But I'm bullish, guys. Even if we do come down to the 110 level, that's where I will be buying like a psycho. 110 to, and I think there's liquidations. This is black box you see right here at the 107 level, where okay, so let me back up. 1.7 trillion was liquidated in longs and leverage positions with this fat red candle right here, which is the biggest liquidation event we've had all year since 2024 December. So it's nearly a year, about 10 months that we haven't had a sell-off this big, right? So the market's a little bit spooked. Typically, when we have a sell-off like that, market moves sideways a little bit, kind of chops. But I would love if we come down to the 108 level, even liquidity grab down into this black box at 107. I am a huge buyer. Does that mean I'm going to do a 500x leverage? No, of course not. but I will be taking sides. I will be, leveraging more than I normally do because I am this is where you take out 1.1 billion additional to the 1.7 billion that got wiped out just a couple days ago. So market movers always look for liquidity. They don't care if the market goes up. They don't care if the market goes down. They will hunt your stops, right? So the direction doesn't matter. If a lot of people are building shorts, they'll move the market up. If a lot of people are building longs, like they already have down here, they will go down there, guys. So Bitcoin, those are my levels right now. So for now, sideways. And Ethereum got hit the hardest more than Bitcoin. That is a nasty spill. But I am super bullish around the 4,000 level. That's a nice round number that hasn't been tested. If we sweep those lows, that is my mega bullish zone for Ethereum. So that's it, guys. Like the video. If you'd be so kind, subscribe if you haven't already, because I'm going to be a little bit more active. And if you guys want to write a comment, that helps us, show everybody that Trade Algo is an awesome company. We don't want the get rich quick scheme. We want to genuinely help people make money. If you guys go to our Trustpilot on Trade Algo, it is just swarming with so many people that say, I learned about risk management, I learned about rules, the support is awesome. We have a lot of good mentors. Roman, that guy's on fire all the time. So, yeah, it's not just the tools, it's the education, the mentorship. And I have a very similar style. And from 10:30 to 11:30 every single day, we go over our winning trades and the market. So that's it, ladies and gentlemen. Hope you guys enjoyed the video and the analysis. I look forward to trading with you guys tomorrow in the morning on Wednesday, and I'll see you guys in the next one. Peace.